right, so another ASTRA webinar. Getting close to the end of the year now. This is one of my favorite topics, revenue and data. It's something that fascinates me and my team, and it's a core to the industry as a whole. It's one of those things that for many years was probably a bit overlooked, but the importance of having good rates and strategy is critical to good business, right? So I'm super excited to have some experts in the room with us to discuss talk about some strategies regarding revenue. We have a few Wheelhouse legends here, John and Oliver, which is really exciting. And then we have Charlotte from Urban Rest, Abdullah from Home Time, and Matt from Allogio, which is super exciting. So we've got a broad spectrum of industry experts. I'm very stoked to have their insights shared in the group. As always, if you've got any questions, feel free to raise hands. And if you've got any comments or anything while someone's talking and you really need to get them out into the little sphere, just drop them in the chat and we'll get to them as we go. But in regards to that, obviously, be kind, be polite, and ask questions, get involved and be a part of it. So over to you, John. I'll leave for you to do the introductions and take it from here.
I'll let Oliver go first.
Forgive me, I'll jump in quickly. Welcome everyone who's watching today and in posterity. Wheelhouse is really excited about Australia and New Zealand, and we're showing up more and more. I recently had the privilege of visiting some of you in Brisbane for Here to Stay, and visiting Sydney as well. So expect just to see more and more of us. And we really are passionate about advancing education. Of course, we are a software company, but this is a discipline that is still emergent in our industry. And so giving it over to experts today to talk about what they're experiencing and how they're solving problems should help some of you in your own businesses.
Hey guys, pleasure to be chatting with y'all. Got a great group today. Just a little background. So we'll be using the kind of same revenue management roundtable format. I don't know if you've seen any of my others, but we bring on some great revenue managers and have a conversation about what's going on right now. Hopefully you'll have some takeaways, even though you may not be in the same markets or have the same portfolio, but you'll get some ideas on how to improve your own revenue situation. My name is John DeRelay. I'm the head of revenue management education at Wheelhouse. Been with Wheelhouse a long time, so if you're talking to us, you probably talked to me. And prior to that, I spent 10 years as a revenue manager for an organization with Stay Alfred, where I led a team of 10 revenue analysts, managing about 3,000 properties across 33 US cities. So lots of experience in the space. Look forward to chatting. Let's go around and do some introductions, then we'll just kind of dive right in. Abdullah, do you want to go first?
Yeah, awesome. Thanks, John. Abdullah from Home Time. Might have heard of us. We have a big presence in Australia across many states, different markets as well. So some city markets like Sydney, Melbourne, and then more vacation markets like up there with Cairns and Darwin and a few others. Excited to be here and chat revenue management.
Awesome. Charlotte?
Hi everyone, Charlotte from Urban Rest. I've been within the company for less than a year actually, but I'm bringing 10 years of experience in revenue management. We have roughly 700 units across New Zealand, Australia, the UK and Ireland. So we also have big city, the units in the big cities in Australia and also in Auckland. And happy to be part of the panel.
Awesome. And Matt?
Yes. So similar to Charlotte, I've been with Allogio in revenue and distribution since the start of this year in March. First time in short-term rentals for me, but been working in revenue management in the accommodation industry since about 2011. So obviously I'm not tired of it yet, I guess, and excited actually for where it's evolving in short-term accommodation. It was very exciting actually on a Airbnb forum a couple of weeks ago. They opened it up to the tables and everybody could speak. I think Abdullah were there as well. And everybody could speak on one of 4 different topics about, owner relations or cost management and that. And I think almost every single table chose revenue management and pricing and that. And it warmed my heart to see so many typically property management minded people embracing the art that is revenue management. So
awesome. Well, I'm excited to have a good conversation. We're basically going to cover three main topics. We're going to talk about what was going on over the last quarter or season, what's going on right now, and what you guys are expecting for the next quarter or season. I'll try to reverse my brain here. Where I am, it's very cold, but I know that you guys are in the middle of the summer, if I understand the globe correctly, which means you're probably pretty knee deep in working really hard. So, you know, that season coming into high season is really interesting. Coming into that booking season, getting ready for high season. How did the kind of lead up into the summer go for you guys? And we'll kind of swing back around. Matt, do you want to start out? Tell us what was interesting to you. Did you notice some trends in your portfolio that maybe you had to respond to, or how have you just been managing this year?
Yeah, for us in our portfolio, we exist outside of capital cities. We don't do really any capital city at all stuff. So what we are used to seeing in the regions is longer lead times at first, especially for this peak season coming up, Christmas, New Year's, that stuff books in. And then the medium to short term fills it in around September, October, November, and that. In a lot of our longer distance from the capital markets, so mid to north coast of New South Wales, out further Great Ocean Road, sort of outside of Gold Coast, beyond Sunshine Coast, Queensland, the places where you have to more fly to than drive to, that short to medium demand business has not been there. Where did it go? It's not there. What we've found is that places within a 2-hour drive of a capital city, they're starting to get that business, but very, very late. People are making weekend bookings or 2 weeks before. So what we've seen is an intense contraction of the booking window, a little bit shorter lengths of stay, and a little bit closer to home travel. Economic conditions, we know what they are throughout the globe. Inflation, the rise of inflation has been easing in a lot of parts of the globe, but people are still concerned about it. The interest rates are still high. They haven't been cut yet. So we're seeing that kind of pullback in a lot of the less advanced planning. People have still made their big Christmas plans and that, but the discretionary stuff outside of it, that's been what's people have pulled back on. So we found that a bit tough to track versus our normal pacing expectations.
That makes sense. What kind of actions were you taking in response to seeing that contraction of the booking window and that kind of loss of that short mid stay?
Look, price is obviously one of the drivers of these things, and you need to look at all of your price and make sure you're still relevant in the market. Well, the big thing for us, and we're trying to impact, we're calling it actually a cultural change, is a lot of our owners have an expectation of a certain minimum stay in a peak time of year. It's very easy to talk them into things in low seasons, June, July, midst of winter, if they're not a wintertime destination. You can say, yeah, do a discount, shorten everything up and that. But they expect, well, no, January, I get 5-night stays easy. And when it's not coming this year, they think you've done something wrong. So trying to talk them into, actually, you can trade a little bit of a higher price for a lower length of stay, make about the same money on a booking as a booking total, but you don't need to filter out anyone that wants to stay less than 5 or 7 or 9 nights or whatever, especially in your bigger properties where the owners expect someone's going to come and stay for 10 days. They're not doing that now. So you need to get that across them and say, be a little bit more permissive, take a booking that's worth almost the same amount of money, so you're still protecting your margins, but now you've got some revenue on the book still coming through, because that's what's out there. People are just pulling back 1 or 2 nights from what they would normally do. So that's been a big focus of ours, is trying to actually ease up on the restrictions.
Awesome. Thank you, Matt. Charlotte, what's going on with your portfolio for the kind of season leading up to high season? What have you been noticing?
Yeah, it's actually very interesting to listen to Matthew, because I felt like the opposite trends. I think our business model wants it this way as well, because we have very high minimum lengths of stay far in advance, and we tend to decrease them as the booking window becomes shorter. So basically, I think New Zealand was also a piece of education for us, because we just upgraded the business back in May. So it was, a very educational curve for us to understand the market. But what we noticed is that the booking window is actually very short, and people are very price sensitive. So our main business is in capital city, actually. So we target rather long stay and corporate customer. But New Zealand is very leisure oriented. The minimum length of stay is very short, so like 3 nights, and the booking window is actually very short for us at the moment. We can do for the month, with the month, up to 25 points pickup of occupancy, which is very big. So for New Zealand, we need to start. For Australia, I would say it's also like, the booking window is also shorter, minimum length of stay as well. But we managed to still build a strong corporate base with very high minimum length of stay, a little bit like in advance. So this is what we noticed.
How do you price in that kind of urban portfolio in the 30 to 90-day window? Are you keeping your prices high and bringing them down? And I guess also, like, if you have this big corporate segment, how are you pricing the difference between your leisure and transient versus your corporate stuff?
Yeah, so this is the thing, like in the industry, usually you say like, oh, we want to rather have ascending pricing. I would say like we rather like go descending pricing when we see that we're not filling up with occupancy. So usually like the far in advance booking is rather direct booking, corporate booking, so contracted customers, and then we fill up with rather retail customer, like a little bit with a short booking window. I would say prices are kind of competitive for in advance. We also have like our contracted customer, and then we are actually like dropping the price when we see that the occupancy is not there or demand is not there. For New Zealand, we've seen that we had to really drastically drop the rate. Like the demand is very, very price sensitive, especially on the retail channels. And it was actually like challenging to please our owner because they really want to have high rate in this market compared to Australia. So we are trying to find the middle ground to kind of like please everyone and to still grab occupancy, because depending on your business model, which is managed or leased, it's better to have a revenue than just an empty unit. So
Awesome. Thank you, Charlotte. Abdullah.
Yeah, so I think similar trends, I guess. So we've got properties in capital cities and then also kind of similar markets to Matt has. So definitely seen over the last like shoulder period, we've had to be more strategic when it comes to dropping price earlier. And also, very dynamic in that kind of minimum stay kind of thing as well. But in capital cities, the last couple of months, we've seen quite a few events in Sydney and Melbourne, actually. So November is a bit of a gig city, a gig kind of month for these markets. So been holding where it makes sense there, but definitely have to come down on pricing a bit earlier. Definitely people are more, the guests are smarter when it comes to kind of booking those rates. So it's definitely for us, it's a game of finding that balance where to make the owner happy, keep our kind of bookings coming in, and keep an eye on booking pace as well.
When you position your rates for like year over year, so let's pretend we're like last year, do you keep a pretty because those event periods are really difficult to price for because you don't know when they're going to be. And so I see a lot in urban portfolios that like people tend to keep their price quite a bit higher than they maybe actualize on average. Is that something you're doing? And are you adjusting any of those strategies in relation to changes to conditions?
Definitely. So an example is the Grand Prix, Formula One Grand Prix in Melbourne next year. We would have had kind of overrides in place at a higher price, but where it makes sense. So would be capping the kind of max rate, but making sense where it makes sense. It's not too crazy. And where we don't have the dates yet, we have a general idea where it would land. So we'd have like that whole month or whole 2-3 weeks around it, kind of at a higher price. And then it's kind of watching as the months tick by, if those bookings are coming in. So we play, it's basically a monitoring game of where if the booking pace is there. And it's always an event around the corner, so it's always interesting for us.
Yeah. I'm curious because you've all kind of mentioned this shortening booking window. Obviously, in hindsight, it's very clear. But when we put ourselves back in September and October, what were you thinking then? What were you doing? And if you did make changes to your strategy or didn't, do you think that worked or what would you do different? And maybe we start with Charlotte and we'll kind of bounce back around and then we'll go to the next season.
Yeah, I think like we are constantly adjusting length of stay and pricing on a daily basis, I would say. The thing is that our business model, for our business model, so we don't have minimum length of stay or like no one can book for 1 or 2 nights basically. The lowest one is 3 nights and for some properties 7 or like 25. So basically like when we have this length of stay of 3, it's usually within the next 20 days or the next 30 days, for instance. Like far behind is like usually like 14 or 21 minimum length of stay. So we noticed that if we wanted to start to pick up a little bit more in advance or fill in, we had to reduce like already for the next like 60 days. So we had to adjust that, especially for New Zealand, like I said, because we find out it's more leisure markets. For the capital city in Australia, I think the pickup for Melbourne and for New South Wales was actually pretty steady, with pretty high minimum such as well. But yeah, Queensland, I would say Adelaide and Canberra, it's also like different markets. Canberra is very much depending on sitting. So if you don't have sitting, it's pretty difficult to fill in the properties. For Adelaide and Queensland, we saw kind of a drop in the demand for the past months and still the current months. The demand also like for the next year is not quite there yet. So we still like adjusting everything, and if we have to drop any months of the fine advance or the rates as well, we are doing it.
Awesome. And Abdullah, do you want to let us know what maybe worked or what you changed or what didn't work?
Yeah, I think for us, definitely keeping an eye on market pacing. That's been key for us. So if we find our portfolio is lagging behind last year and if the market's at a similar rate, then it's a signal to us to jump in there where it makes sense, drop pricing, and then even the use of channel promotions. We've like used a lot on Airbnb promotions and Booking.com as well. So that's generally been kind of the consensus from us, monitoring and then reacting where we can, trying to be as nimble as possible.
Promotions. Always good. Not always easy to operationalize, though. And Matt, what about you?
Yeah, first of all, just Charlotte reminded me, everything I said before, take out Queenstown from New Zealand. None of that holds true for there. That place is an unstoppable juggernaut of bookings. That's the only exception to all of my economic and all of that trends chat. That I've never seen anything like that in hotels or otherwise. But what I will say is that for us, I think one of the things that kind of clicked when we were looking at the pace isn't normal is when we saw in some of these areas the average booking window, like the lead time, was actually lengthening significantly versus same time last year in the market. And that's when we said, well, that's weird. How does an average booking window get longer as you get closer to the date? And that's because none of the short lead stuff was coming. So that's where we had to say, all right, it's either a very shortening booking window or it's just not there. So then you have to try and account for both possibilities. So you pick out where you really want to protect, and that's obviously your holidays between, the big holidays around long weekends, etc. And then the rest of the time you want to introduce your flexibility and the pricing and the restrictions on that to try and get any of that incidental stuff that seems to be dropping, because that's what books in the mid to short is, all of those incidental stays or spur of the moments, or kind of, oh yeah, let's take a couple of days and go here and there. And to events like we've got a significant Hunter Valley wine country portfolio, and they do have concert events and that. So trying to track those versus last year, those stayed on mostly the same pace, and we were able to hold a bit for, even though the booking window on those was shortening a bit too, hold a bit on those and know that yeah, it's coming, and make sure we didn't, you know, pull a panic lever, I guess, too early to say, oh, it's not there yet. And it did happen, and we got to about where we expected to be, but it was much later and a little bit more skin of your teeth kind of thing. So it is kind of, you know, not to quote the gambler, but knowing when to hold them and knowing when to fold them on that. And I think that's probably the biggest thing of having the right data, and also looking at the market as well to say, right, are we on trend with the market? Has the market filled up ahead of us? Did we miss some sort of boat? Or no, we're right on trend with the market. Nobody else has gotten it yet. It's coming. Wait.
Makes sense. And we've talked a lot about the kind of like booking window for the high season, which we'll mention a little bit. But I do want to know, did any of you guys have any strategies in that shoulder for your actual stayed on occupancy during that kind of booking season? Did you guys do pretty well there? How well did you do? Did anyone do something that was they felt was really successful, or maybe that they wish they had done differently? Anyone can jump in on this one if you got something.
Yeah, I think from our end, definitely the use of promotions. I think that I can't harp on about more about that, but yeah, tough to operationalize. But we've got a great team that goes in and does that for us. That definitely worked, and just trying to be. I think we set up like ourselves earlier this year to just be as realistic as possible and kind of condition owners to that, right, when it comes to these shoulder periods. So I think that worked well for us. You know, no secret, cost of living pressures here as well. And yeah, guests have a lot more options. Yeah, Australians are flying abroad more than they're going to those, yeah, kind of, as Matt mentioned, fly to destinations in Australia. So that's where we're gonna have to kind of give a bit. But saying that, yeah, it's knowing when to drop the rates. That's always a difficult kind of question to answer.
I bring it up
Yeah.
because there was a trend I noticed in the United States this year, where kind of it's been 2 summers that weren't great. Like last summer in the US, leisure markets did okay, but there was some like early signs that things weren't going to be as strong. And then this summer was pretty tough for a lot of leisure markets. A lot of people didn't perform as well as they wanted. But we saw really strong performance in one of the shoulder seasons and not the other. And I have a hunch that it's because the spring shoulder season, people hadn't gotten more conservative when they did their rate planning. But after the summer, they were super conservative for the fall. And they had 2 great falls in a row, and they had a bad spring. So I'm just wondering if you guys are anticipating needing to, a big topic on the US roundtables is building a base of business. If you guys have some strategies you're thinking about for kind of next year, just anticipating to drive that shoulder season if possible.
Well, I'll just say before short-term rentals, I was working in luxury lodges, and it was a very interesting 4 years there from basically the start of COVID all the way through till this year, where the luxury lodge market, because you're dealing with a clientele that has as much disposable income as you can imagine, and were really only restricted by the actual logistics of travel, whether or not they were allowed into a country or planes were flying. It did follow with a 6 to 12 month lag on the US market almost identically. So it's very interesting to hear you say that, because I think we're seeing the same trends here. The Australian market seems to be, last summer was a bit more of a, but not quite as much of a drop off from that big boom of 2022, where everybody was still a bit captive, had already made plans and stuff before all borders opened and that. And now we're seeing an even bigger drop off. Obviously, the inflationary pressures, interest rates have caught up with a lot of more people at this time. So I think even if we can keep our eye on the US a bit to say, so having that advanced knowledge is good, to say that these kind of, if you're seeing downtimes in markets, the end of the road is not imminent, and we need to act accordingly. We need to not assume that a big time is just around the corner or things are reverting to mean until we see some sort of change in those economic pressures. So be really planning for that and priming owners to say, look, we're going to try and do what we can for you to keep your bookings coming. So don't have that same mindset of well, now's my time to really, get the big long lengths of stay that I'm used to, and really kind of change some mindsets around that. That will do what we need to commercially to keep you taking over, but you got to come along for the ride. And that's obviously one of the biggest challenges in this industry, is getting owners to come along for the ride, that you know what you're doing, and we're trying to get you through this.
Yeah,
And John,
and I
just quickly
imagine
from the chat, they're asking if that US trend is more of an urban or leisure market.
So I'm referring to kind of a broad US trend. Most regions in the US were down in occupancy this year, although slight increases in ADR, which I think shows a mismatch in the actual pricing behavior as well, between the companies selling product and the consumer. Urban markets are pretty diverse here, so there's quite a bit of differences, and they're also tend to have much bigger supply implications, where there's lots of different levels of supply entering urban markets, so they're a little harder to evaluate what the consumer is doing. I think the big bellwether would be the like leisure markets in the US that just had lower occupancy and express some similar things. Very much shorter booking windows. Revenue managers are unsure how much of that is because they were holding too much premium rate versus actual reduction in demand. We saw a few other trends where you can tell shoppers are looking because shoulder season was doing okay. You'd also see really strong pacing around holidays, but not on the holidays themselves until you reached like prime window. So it would almost look like they were pacing behind and then they would catch up, but the dates around them would pace really in advance. And already this year, we're seeing a similar kind of booking window thing to what Matt mentioned, which is this big bifurcation. The average booking window is down, but when you look at a distribution chart, you actually see that there's a lot more early booking and a lot more last minute booking, and the mid is missing. And again, I would say that some of that is the pricing behavior of the revenue managers themselves. People really are less willing to give up during what they say is like, this should be our primary time. But some of it also is probably changes in the consumer behavior. Answer your question, Oliver? Trigger anyone else to think about something you've seen in your guys' portfolios?
Yeah, I think look, that's I think your point about revenue management is definitely something for over there. I think there's a lot less professional revenue management happening or dynamic pricing in the Australian market. I think we haven't hit quite the US levels of sophistication. We don't have a lot of big operators either. I say with the big Logio sign behind me, but in terms of actually in terms of large property count operators in this market, there are very few. We have a lot in the sort of mid-range, 100 to 300 range, and there's a fair few there. They tend to be associated with real estate companies or other long-standing operators. But I think so much of our market is still very much individual and solo Airbnb listers or whatever it may be. So I do think that where we've seen that bifurcation, I think that's a very natural market phenomenon and not necessarily responses in pricing of that, because I don't think we have a very dynamic market on the whole yet down here.
Yeah. And you did mention some stuff about like the drive to. That's a really interesting element. I don't know, like a lot of the drive to markets in the US in many cases have lots of drive to options. And so some revenue managers have had to start considering other markets when they're thinking about what markets are doing and pacing, because they're actually potentially competing against a nearby beach or a nearby market. I'm not sure how that, how often that's going to apply. And it doesn't apply everywhere in the US, obviously, but that was a pretty interesting trend. We also kind of saw that in like B tier ski markets, where when everything was packed after COVID, they had like huge increases, but then, people didn't come back when they raised their price because they went to a different one. So there's some kind of like cross-market trends that I think are kind of interesting that revenue managers have to start paying attention to, which is, you might be competing, if someone is in a city and they're like, well, I'm going to drive 2 hours, where else can they go? And what are those people doing from a revenue management perspective?
Yeah, that's super interesting. That's something we kind of see here as well. So just a context, Sydney, and then there's a few drive-to markets like Hunter Valley, Matthew Kemp mentioned, and then Mudgee, which is more wine country, but then there's also the coastal destinations, which yes, it becomes a game of choice. So it's like you have to kind of watch what everyone else is doing, and unfortunately, there's a lot of choice, so you can't be pricing yourself out. Even like can't hold that like last minute either, but also kind of in these sort of shoulder periods, make sure your price is right there as well.
Absolutely. Well, let's switch into just kind of what's going on. I imagine this might be a little shorter season. High season tends to be a little easier for revenue managers to talk about because you tend to be booked by this point. But how has high season been going for you guys? What are some trends you're noticing? What are some things that you're, either reacting to or trying out? Would love to hear any ideas. And you can always push that forward, say, hey, we saw this year. This is what I'm thinking for next year. Charlotte, do you want to give us a start?
Sure. I just would like to first highlight that. So basically, for us, we are growing inventory year on year, like doubling year on year. So sometimes for us, it's like it makes it hard to really compare versus last year trends because like we don't have like the same amount of inventory versus last year. So we are really collecting all the learning from this year, actually 2024, for the next year. So for the high season coming in 2025, so depending on the market, so we have like all those big events, for instance in Melbourne, which Australian Open, Formula One, and so on. We right now didn't see so much the pickup that we expected. So this is where we're already like starting, like to adjust our pricing. Length of stay, we're still looking at some promotion, as Abdullah mentioned, like on Booking.com and Airbnb. But yeah, as much as we want to hold rate, we still want to get the pickup. And New South Wales is actually pacing very well at the moment, and Auckland as well. So we have also like very major event as well in Auckland for January, for instance, which is like bringing a lot of pickup at the moment. But yeah, it was just, I would say like same time last year, we're still pacing ahead. But as I mentioned already, like the portfolio has changed so much that the comparison is always like harder to make. So yeah.
That makes sense. I mean, growing portfolio is a really tough data position to be in. What kind of data sources do you use to make decisions in lieu of having, really stabilized pacing?
So basically, instead of like looking at same time last year, we try to look at either same time last month or closer months from the same seasonality that we just eventually closed. And we look at market trends, we're looking at ASTRA as well, our positioning in terms of pricing versus the competitors. So yeah, we have a lot of like tools on hand that we can look at. And yeah.
And where do you go? Just this is a short one, but where do you go for your market data? And specifically, what data points do you try to pull to look at?
I think you usual like metrics, pacing, so pickup, you look at your RevPAR, occupancies, and so on. We look at comparable, properties that we have on the same market, how they fill up, and at which pace. So we try to look at our on market and our portfolio into the markets, and sometimes we exchange with other revenue managers as well to look at trends. So yeah.
Awesome. Abdullah, do you want to tell us a little bit about summer?
Yeah, summer it's been pretty good. I think we've had good pickup some urban markets and where events are coming in. Rates have been good. Generally speaking, pacing has been good that way, but we're seeing, in and around kind of some dates that are lagging. So we just have to keep an eye on that. For example, next weekend, right before Christmas, there's a few properties weren't booked. So it's like, just kind of isolating kind of weekends in that season and then trying to really get that booked so as we have a good occupancy in the kind of peak season. But yeah, it is, then it's kind of like reducing those restrictions, whether it's length of stay or, dropping on price as well when it comes to that part of high season.
What do you do to identify those dates that are like, can you tell us a little bit about like either your process or your business intelligence tools that you use to like identify when you're going to make changes?
Yeah, definitely. So we look at day occupancy per day across the next 2 months. And then it's yeah, comparing that to the market occupancy for those particular kind of market. So whether that's trending, we use Price Labs. They've got a good market dashboard tool, seeing exactly where particular properties are pacing behind or below those comp sets. So that becomes a kind of then it becomes that decision of whether we should drop it. We tend to kind of had this kind of more conservative approach for the last year or so, where we can, and obviously keep some of the more peak dates, which is as high as possible when we can. But that's the kind of approach we take.
Perfect. Sorry, I'm just writing some notes. Yeah, I think that makes sense. I think it's interesting that you said you're taking a more conservative approach and really just protecting the high dates. What does that conservative mean for you?
Yeah, so that's a good question. It's where we can, where we have flexibility with owners, dropping more further out those dates that are pacing behind, where it makes sense, right? So you don't want to layer on promotions on a peak season date and then hear it from your owner. So yeah, where it makes sense in that sense. So yeah, it's just not being like too crazy, expecting the same rate for say New Year's Eve and Christmas on the weekend before that, right? So just like really being strategic about that, and making sure it's constantly checking, making sure prices are right compared to the market.
Yeah, that makes sense. And what you said about the owner is kind of funny. Wheelhouse is designing some reporting that could be used for owners, and we're kind of asking ourselves, like, what is the goal of this for the end user? And it's like, I think it's to not get called by the owner. No calls, right?
Call you. If you don't hear from the owner, that's the best best outcome, isn't it?
Awesome. Matt, do you want to tell us a little bit about summer?
Yeah, look, we've got a sort of feast or famine situation going on. I know I've made the same point a few times, but it is, some places are actually ahead of last year and doing quite well, and other places are well behind. And look, there's areas that we know have been subject to extra regulation, night caps, and that sort of thing. Everybody Australian based on this call knows exactly who I'm talking about, where not only because there are exemptions in there, so it's not necessarily a case of it actually impacting because of the time. Even if there are night caps, everybody has their availability out there, but I think it's just impacted the general tourism sentiment of that region. It's made flights to their regional airport less frequent. It's turned people off going there. It seems prices are higher because they have less days on set. So I think there's a lot of general factors of those areas. But then the other ones, and we have a general theme of that, and it's a couple of hours or less outside of one of our major capitals, which we have quite a few less of here than the US does. So really, you can just pick one of the 5-6 big cities, draw a circle around it, and there's your options for your drive markets to have a point of difference from the US. But yeah, so I think the number one thing we look at too is, one, changes in portfolio size. If we've had a change in portfolio size, how's it tracking sort of per bookable listing in terms of revenues and occupancies and that. Two, we want to look at, I'm a key data advocate. Are you on key data? If you're not, why not get on it? The more people are on it, the better it is. So it still, I think, doesn't have as good a coverage as it needs to have down here in Australia, New Zealand. So if anybody on this call is not on it, get on it. But yeah, no, really, they don't pay me to say that. It just helps my job. The more people who are on it, the more direct data I can source, because and especially in some of the places where we are down, and we're looking at down versus last year, the first point that I go to then is like, well, is that us or is that market? I immediately want to know, is that us or is that market? And that's, one of the things you say is trying to avoid those owner calls. When we're looking at a down versus last year period, the owners already know. They're already calling. So the first thing we want to be able to say is, right, it's the local market, and then here's what we're doing about it. It also influences what you do about it. If the market looks okay and you're behind, then you need to fix something that you're doing. your pricing is wrong, your minimum stays are too restrictive. Even looking at your listings, your photos are bad, you haven't had a refurb in a while, something like that. Like all that stuff is then on the table, push it all out there. If the market is bad and you're bad, and that's when you need to say, okay, we're now fighting over a smaller pie. What do I need to do to get the limited eyes that are on our area onto my listings instead? And that's where you go. First place is for listing optimization. Second place is for restriction reduction. It may not be a price sensitivity thing at all. It may just be you need to get the attention in your area. So it really does influence your strategy based on if you're fighting market conditions or, internal misalignments, shall we call them? Because we
Are
don't
you
make
guys having, sorry, go ahead.
Oh, I was just gonna say, because we don't make mistakes, it's just a misalignment.
Do you guys have any specific segments of your portfolio? And I don't really mean like market or even bedroom, but just like parts of your portfolio that you notice are really performing differently than other parts, either up or down. And why do you think that is? I can give you an example if anyone wants, but
Yeah, what's the example?
I'll give you an example. So we're seeing like mid-range inventory, especially lower mid-range inventory, is getting butchered in a number of US markets. Like there's a lot of stabilization among high-end inventory, and it's this kind of like lower mid drive to market demographic that's just, when we say the market's down and you talk to some people and they're like, well, I'm not down, and other people are like, I'm down a ton. That's where it's coming from.
Yeah, we've some similar things. I think capital cities see that a lot here. The likes of Melbourne, there's thousands of two-bedroom apartments. So you've got to really stand out from a quality perspective. Whether that's styling or even just a better listing. So that with that kind of trend, we've definitely seen quality's been a focus of ours as well, kind of that listing optimization piece. But yeah, it is. I think that's been the key factor when properties aren't being booked as well. Some markets, it's usually the ones that have the bad ratings, and maybe they're just a bit plain where they should be a bit more styled up. So that's been the kind of what I've seen. Nothing like too crazy in terms of like stats in terms of two bedrooms, but that two bedroom kind of stood out for me in Melbourne.
Mm. Do you guys have supply concerns in any of your markets? Yeah.
Sorry, I was going to pipe in with a question that felt somewhat on topic, but also just to understand Charlotte and Urban Rest's position within this. Charlotte, I was curious. I know you said you focus on midterm bookings, but I know you do some gap filling and do some shorter stays. So how do you tap into trends and relate to trends in short stays when it's not even necessarily your primary focus for occupancy?
Yeah, very good question. So yeah, I would say we really focus on corporate long stay booking. So I had to think about what I'm gonna. So basically, it's like roughly 60% of our business at the moment. So we really get short stay booking, within the short booking window from retail. We still focus on them, especially like on certain market where we see the demand is not there, or if our corporate-based business is also not there. So we still focus on them. We go we are obviously present on all the retail channels, and we do a lot of promotions as well. I just would like to also back what Abdullah said about the trend on the two bedroom. So we've seen that as well in all the cities. So 2-bedroom and 3-bedroom are quite challenging to fill in sometime. On the other hand, we've seen actually, and I think it's pretty normal for the Christmas and New Year's Eve period, and also big event, we've seen the 2-bedroom and 3-bedroom filling up much faster than the one and studio apartments. So this is what we noticed. So it really depends, it's very impacted by the events and obviously that.
Interesting. Do you use the short-term data for your long-term decision making, for the long-term revenue management decision making?
What do you mean by that?
like I'm just curious because I don't know too many great like midterm, long-term data sources to kind of know what's going on. Like we have a key data in the short term, travel, hotels have Smith Travel Research, CoStar, these other things, but those data sources I'm not too aware of in the midterm space. So I'm wondering like, are you extrapolating off of short-term data? Are you really just using your own and doing it very proprietary? How are you making decisions about your inventory and pricing choices with that midterm segment?
Yeah, I think we're looking a lot at our internal data on that because I think we have also like a very specific business model that's not a lot of our competitor are doing. I think because we're also like really focusing on corporate segments, so we aim to not be very leisure oriented. We also like only operating in capital city. So yeah, we look at that. We are also working with a lot of blocks, so we try to really protect our calendar with long stay blocks. So we are basically taking out our inventory. So we really like want to focus, so we can focus really on the long stay bookings rather than the short stay one. So this is how we adapt our strategy. But yeah, like I said at the beginning, New Zealand is a very totally different market from what we can see in Australia and from our biggest strategy. So we try to actually adjust New Zealand at the moment, and we actually aim to have the leisure segment because we're really depending on them, and the short stay as well as segments and bookings.
Yeah, that's interesting. I work with some midterm companies, and it almost seems like the focus is more on inventory management than yield management in many cases. It's like how and when do you sell, not getting big gaps on your calendars. How do you actually like operationalize your price so that you don't get those gaps on the calendars? You said you can fill, which is a great position to be in, but that's very interesting. I wish we had a little bit more time to dig directly into that. Maybe we'll make another webinar, Oliver, just about the midterm stuff. One question I did have for you guys before we kind of go around the horn and just talk about, some tips for next year is, do you have a lot of supply concerns in your market? In the US, a lot of markets have gotten very highly supplied in a very short amount of time. It appears to be impacting a lot of what's going on, and I'm just curious how that's going on in Australia and New Zealand.
Yeah, I can go there. We've definitely seen similar trends that way, maybe not as exaggerated. I think in the capital cities, there's a bit more regulation coming in here as well, I think, which scares away kind of investors. But certainly some of these leisure markets, there's been, after the kind of boom of 2022, a lot of people put it on Airbnb, and then now we're seeing a lot of like supply, especially when a lot of choice. So there's a bit of pressure there. Maybe not as exaggerated as the States, I think, but yeah, definitely seen that across the board.
For example, like I think we've seen that in Melbourne. So there's a lot of supply in Melbourne versus demand. When we compare, like for instance, New South Wales and Melbourne, they are like two big cities. We struggle much more to fill in our properties in Melbourne than in New South Wales because the supply is really big compared to the demand. So yeah, this is a trend that we've seen.
Yeah, and look, regionally, obviously, we're dealing with sort of smaller places where, I was looking at one area yesterday, and it was like, oh, it was up 100 more units than the same time last year, but that was up from 300 to 400, so a 30% increase, which is fairly significant, and can be understood. So I don't think it's been like an unsustainable supply growth in any way. These are definitely people who were late to the party, who probably should have, if they really wanted to make money, put their units out in 2023, but they put them out in 2024. Sorry about that for them. But, I'd expect it to probably start leveling out when a few of these, and they probably pulled them off a long-term rental, had a long-term tenant in there, wanted to put out in short stay, and then they'll possibly go back to that and that. But I would also expect possibly a bit of supply rationalization to start, because not to get into maybe your next point of what's coming down the future, but what does the next year hold? I don't know if I'm preempting maybe your next discussion point, but the the thing, and what we're hearing a lot from at least Airbnb, and I think the OTAs are starting to do this, is a bit of quality control more so than they ever have. Airbnb explicitly said it to us in a room a couple of weeks ago, that they're gonna start pushing out the lower rated stuff. We've seen a few of them where we got flagged for delisting on some listings that hadn't had any bad listings hadn't had bad reviews this year. In fact, their most recent stays have been 5-star reviews, and they still flagged us. And so obviously we're launching appeals on that, but it's like, why now? It's because they're starting to drop their bottom out. And I think the more and more they start to do that, because they hold such a high level of individual owner listers as well, the kind of more turned off some of these people will be from short-term rentals. So we could see some supply variations based on some external channel behaviors as well.
Yeah, that's really interesting. And it's interesting you bring up the channels. I noticed this is kind of like a meta observation of mine, but in the revenue management roundtables I've been doing with people in the US and Europe, the conversation over the last 6 months from the revenue managers has almost exclusively always ended up on distribution. That there's some like acceptance that the price is where it is, and that actually the merchandising and the distribution is now the biggest opportunity for companies to optimize their revenue management. And it's also not just an opportunity, but it's a requirement, because they're watching these ads disappear from getting viewed. They're starting to track conversion rates. They're finding ways to get that data out and really focusing on, like, in some ways, just going back to the owners and being like, your property sucks. The market is tough. Make it better.
Yeah.
Yeah. Pretty interesting.
Okay,
it's so we got...
Yeah. Sorry, I
Go
just
ahead.
it's like going back in time 10 years to all the hotel conferences and stuff I would go to, and all the chat was around OTAs and marketing on OTAs and all that stuff. And I feel like I've just gone back in time and I'm about to do the same thing over again. But at least I know how this plays out this time.
It's so funny. I was at the conferences this year, and I've been in the industry for, over 10 years. And there's all these new software platforms that are like marketing, CRM. And it was like, oh, they just reinvented all the companies that disappeared 8 years ago. Pretty funny. Okay, so we've only got a few minutes, so let's go around and just like, give us one tip or one thing you're thinking about doing for next year as you plan. I know you're still like in the thick of it, but as you're starting to think about what is going to be important for your revenue management strategy next year. Abdullah, do you want to give us a start?
Yeah, definitely. So we're actually doing this right now while being in peak season also, but yeah, looking at the next 12 months, making sure all the events are in the calendar, yeah, making sure our price is right. So just a bit of research, spreadsheets, searching on Google where the demand is higher, why is it higher, and then yeah, just trying to maximize that kind of opportunity where it makes sense in any market, right? So we don't want to sell that weekend cheap or event cheap. So that's been kind of our focus at this point for the next year.
Perfect. Event focus makes sense for urban stuff. You live or die by them. Unfortunately, I don't think Taylor Swift has a tour next year, so. Charlotte.
Just on that, there is like, yeah, Melbourne has Dua Lipa, Billie Eilish, all these other ones coming, and Luke, there's a few other, and Brisbane also. So we're more that come, the better, I think, as well. So yeah.
Yeah. I'll send them an email to their website. Yeah. Tell them what cities they need to show up in. Charlotte, what are you thinking for next year?
Yeah, so first we are actually collecting all the learnings from this year, what we've done right, what we've done wrong, how we can make it better for next year. So I think also the focus is like Abdullah, like event management is also very important. Yeah, I think also for us is also the corporate ecosystem, like we try to contract as much as corporate, long stay in all the different capital city. So yeah, we're on the hunt for that for next year to really build our business and long stay business before like the retail. So this is our priority. Yeah.
Awesome. And Matt, what's your advice?
Oh, I'm going to be cliche because you just mentioned everybody talking about it, but it is distribution and eyes on. I think it's probably a big thing to make sure that, you know, if you're not getting seen, you're not getting booked. And for us, I think there's a lot of still opportunity, and as an industry as well, just to make sure that we're getting to the forefront of people's holiday choices, and really reducing any of the friction to booking that exists as well. You know, really looking at our policies and our booking procedures and things that we do, and it's like, are we making it more onerous than choosing to do a different type of holiday? So yeah, that's the big thing for me, you know, and not necessarily having to rely on price as a lever. We can do other things to get ourselves booked.
Awesome. Well, it's been a pleasure chatting with y'all. Really look forward to the next time we do an event like this. And I don't know how we're supposed to end. Oliver, do you?
Well, we can't end a webinar without Kyle.
Yeah, look, I think I'll close out there, and unless there's any other comments from you guys. Fantastic segment and some fantastic people on the Q&A session. It's super insightful for everyone that's joined today. Look, one of the interesting things that your CEO told us one time was, you know, revenue management isn't about setting and forgetting. It's you know, it's super important to stay on top of everything, to have oversight, and to, you know, have a good, I suppose, person within that business that is overseeing the entire process from start to finish. Because we like the Wheelhouse and Price Labs are fantastic tools to have, but yeah, that oversight from a business perspective and making sure that you're aware of what's happening in your local areas and events, etc., is just so important. So fantastic insights from you guys, and thanks for your time today. Really do appreciate it. Unless anyone's got any final comments or questions, we'll officially close the webinar.
Just quickly, that we'll do these quarterly. And if you are a revenue manager at scale and are interested in participating in a future session, please reach out to me at oliver@usewheelhouse.com or on LinkedIn. You'll see me there. Cheers, and thank you so much to our panelists. Fascinating insights today.